Hello traders, Gary Wagner here, just after 11 o'clock in Honolulu, 5 o'clock in New York on Tuesday, the 26th day of August, 2014. And this is the daily report for gold and silver. Although well off of the highs, quite a ways actually, we do have gold and silver trading higher, platinum, palladium lower on the day. First to gold, currently trading up about $5, a little bit over, 5,550, 1280 and change. The low 78.30 and the high is 1291.90. Silver also trading higher, but actually well off the highs also, as you can see. We'll talk about silver in a little bit, but currently trading up about 2 cents on the day, right at the cusp, 1935. That, of course, is at 76% retracement we've been talking about. Low 28, the high 1978. Traders, I do want to start today's show looking at the 720-minute chart. In essence, a half-a-day chart, standard candlestick format. And what really is prevalent, what really kind of jumps out at me is the fact that we did hit resistance, and pretty sizable resistance, right at around 1290, 1291 in that area. There's no doubt about it. This is at 76% retracement level. Of course, that is a retracement from this last rally. So it's a $100 rally, $76 off of that. And there's no doubt, when we look at this market and the way that it came up, you can see that we did run into some resistance at that area. The other thing that kind of jumps out at me is the fact that when we look at these opens and closes for these half-a-day sessions, we're going to look at a daily chart right after this, but you can see that they've maintained their support level really just above, what is that, 1270 right in here. So that's at around 1275, 1276 in that area. And so we've had good support. This is really the first time we've seen any kind of a bounce in a couple of days, because prior to this, we were dealing with the market trading off of the highs with the inability really to trade past where we have very, very strong resistance, call it 1321 to 1323, roughly in that area. I'm trying to make this line as straight as possible. We talked about the fact that over 1311, we'll go with 1310 here, so just above that, we ran into some real resistance in this area. Market tries to make this high sustainable, cannot, and then we see the market begin to slowly meander down, breaking through 1290, which was a pretty critical area to me, and then an absolute critical area, because it was this former low, was 1280. So we saw the market move below that. Once it moved below that, we were in a concerned profile, and the reason being, aside from these lows right in here, the market genuinely, on a technical basis, had the ability to come down and test the next level. And the next level, of course, if it does not find support, and it looks like it in fact might find support, but if it did not find support or does not find support, a 1262 on a technical basis, that was our most logical level. Now, the market did find support, whether we call it short covering, whether we call it bargain hunting, however the analysts want to term it, in light volume, with very, very little liquidity, and with a stock market rallying to really new record tops on the day, we found support in this market, and the market began to move back up. Now, when I looked at it last night, trading overseas, we were trading up $10, $11. We were up near these highs, and my hope was that in the morning, as New York awoken and began to trade, we would see follow through, carry through, and see this market effectively close well above 80. And I was truly hoping to see it close above 90, although we don't have a position in the market right now. If we saw it close above 90, that to me bodes very, very well for finding support and looking for a market moving back up. However, that was not to be the case. So, as I talked about, we want to absolutely take a look at our daily charts, and we want to look at the daily in two ways. First, Japanese average. Now, on the Japanese average, what we are seeing is as follows. We are seeing this market which has been moving down. We saw candle size begin to really consolidate and compress, and we do have a doji-like candle today. Let's go ahead and erase that. But the doji-like candle is really significant when looking for a pivot point in the market. That's exactly what we want to see if the following day goes green. That gives us a real good color change and signal to enter the market from the long side. Similar to what we got when we look at any of the bottoms, you will typically find a small-bodied or doji candle that really caps the net result or the ending of any corrective action in the market. You got that here. You got that here. You got that here. So the question is, will we get that here? Which brings us to our daily chart. Now, the daily chart in terms of this, of course, is the spot market. You can see this extreme high. This particular candle type, when found at the top of a market, would be called a shooting star, and it's considered bearish. On the bottom of a market, it is called an inverted hammer. You have the hammer and hangman at the top, shooting star, inverted hammer as the four umbrella types. Now, when we look at the fact that the range continues to narrow, and this isn't drawn perfectly, but just for illustration purposes, we have these series of lower highs, series of higher lows here as well as here. Of course, the market came down. This is where we really believe we found support. Market came back up. We just talked about that. And here you can see it's just been drifting below that. The close today does appear as though it's going to close at, not above and not really below. And that's kind of not so much ominous, but indecisive, because I really would have liked to see some follow through and the market really be able to maintain the ability to close above it. Now, you had a stronger dollar. You had equities markets at a record top, and you had gold trading higher. So I think that with the other factors prevalent in the market, gold actually did pretty good today. So what about silver? Well, with silver, and we'll blow this up a little bit, it is technically, you could call it an inverted hammer. It's really more of a doji, and you would call it a tombow or a gravestone doji. As you can see, the market is still trading at 34. It puts it below that green. When it ticks to 34, goes to almost a pure doji. And so you had this extreme high in the market, and then the market came well off of the high. The real question is, in silver, whether or not 35 is going to hold. As you can see, it's real precarious right now. It's trading just below that. If 35 holds, it tells us one thing. If it doesn't, we have a whole new series of technical studies that we need to take a look at to see where it could go. But for right now, my sense is that there's at least a 50% probability that we will find the market holding in this area. Although it's been under extreme pressure, as we can see, this is a pretty dramatic and important level in silver, just as the current price 1280 as an important level in gold. For right now, I had hoped that this morning I'd be able to either issue some sort of a buy signal and really look at the market in a way that I thought it was going to move higher. But the fact of the matter is, we saw the market move up. We didn't see follow through, and we certainly saw no continuity or the ability for the market to even close mid-range near the highs. They're closing near the lows of the day, and that to me is significant. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.